Hello guys, welcome to Traders Therapy Session. I'm your host KRO. Without wasting any time guys, I'm just a little bit late. Let's just get into the video. Today's video is the market review for the previous video that was posted, of which it was the analysis for last week's. I would like to share with you the video and then you can go back to the analysis, since I'm not going to go back there because I've just posted the video. It's 10 minutes long, I guess. Let's try to keep even this one shorter than the previous one. Without wasting any time guys, let's just get into the video. On a monthly time frame, this is all we've been looking all along. First draw on liquidity after the buy side. After we've dealt with the buy side, this is the buy side for the monthly, and then we had a fair value gap. Remember the one that we've been annotating. We've been talking about this for a long now. So I was looking at the discounted fair value gap right here, of which is this area. If I take my fib from this, I utilize this impulse. This is the only discounted fair value gap that I get right there. So this is what I've been watching for market just to drop down. And remember, see, we're still having 8 days for market to run. So this means that we can still utilize this if we get that. So we'll see what the market will do, and this I guess will happen during November. Then we'll see if we disrespect this to test this, or if we test this to come back and close below this. Is still okay, still fine. And if we disrespect this, to me again, we close below this fair value gap right here, maybe a retest to this invasion to come to this area. That is what I'm looking at for this month. Let's go to the weekly guys. On a weekly time frame, let's focus here because we talked about this long ago. So now let's focus here. This was last week's candle, and then you can see the annotations. This is what we've been looking for on a daily time frame. After the market reached that, after NFP, we expect the market to go down because this low is responsible for this fair value gap. So we need to take out this low to consider this fair value gap valid. So guys, we had that. Then we had two fair value gaps. Look at these blue shaded areas, 1 and 2. This is fresh. This has been the second hand fair value gap because it worked. This high is responsible for this fair value gap, and it was taken out right there. So it has been a second hand. So it makes sense after. Let's see this one. Weekly fair value gap. Let's see if we can treat it as a reaper. Okay, so I expect it to go up or come down. But the second one, let's look at this one. First draw on liquidity after buy side. Okay, this is for another time frame. This is the reason why I like to manage my annotations according to the time frames. But we had this fair value gap and we have this one. So look at this one. It will be great if we do what? If we violate it, because we've been bouncing on it. Plus we have the new one. So it will make sense that this becomes stronger than this one because this has been utilized before. So, but the retail traders will see this as a strong support. And this is the good study, guys, for now, to see this is a strong support, but it couldn't hold. Look at the close here. But we're still respecting that monthly fair value gap right there. So for this week, let's see if we reach for this, because we have a weekly fair value gap inside the monthly fair value gap discounted one right there. Oh, this is, sorry guys, this is the slides. I thought it was the market, so I wanted to show you that. So this will be the point of interest for this week. Let's go to the daily and see. Remember this, we didn't have this last week. Go to the previous video please. We didn't have this last week, so we were anticipating for market to come down, and look how it played with the consequent encouragement of that right there. I'm sure after 50% is 75% the sensitive area. You look at that, then it went back down. but it is not done with this low. So automatically we have our analysis that for this week we'll be looking at what? For this week we'll be looking at taking out this low, and if we take out this low, we close without closing this, then this can be our next target for draw on liquidity. Even if we didn't take this one, then that will be a market structure shift. Then we come there to take this. So we'll see what the market will bring. So let's go to the daily. This will be expanded into 5 days. Let's see what last week did. This is what we have on a daily. We have 1, 2, 3, 4, 5 candles. We analyzed this before this occurred, guys. We went into the daily fair value gap right here. This was our objectives, but we knew that the market could run into this. We talked about this area, guys, before it happened. And look at it. Look at how nice this played. So after that, this low right here is the lowest point here. Is responsible for this fair value gap. So to consider this fair value gap valid, we need to see price taking out this low right there. So for now, we can work with this as our draw on liquidity. This lows right there. We have a fair value gap right here. So this will tell me whether the market will come and test this fair value gap, or will create some sort of a fair value gap right here and work with it right there. So I'll be watching that. I'm watching this fair value gap right here. I'm watching what the market is doing and the previous day's low, which is the Friday's low. Those will be for the London traders right there. So this is what happened, guys. Even if we, and this is what I would like to say to all of you out there, guys, even if you saw this market happening, you saw this, look at this right there. You saw this move. But here's something. There are some points, some instances that you are not going to participate on this move, even if you saw it. This is called discipline, guys. You will see with the bus driver model what we have annotated. It's only Friday that we are going to look at it, because even if it played like this, your rules didn't apply to take these cells. You were right with the direction. So if you caught it maybe right here on Monday, but with what? So you would have utilized it and go low, or you could have caught it on Thursday. Consequent encouragement of this week right here. Then utilize that. But you will see how bad the price presented itself here. Only maybe on Friday you could have caught that this move on only on Friday maybe. So let's see what the hourly time frame is saying to the algorithm. So remember on the previous video, we analyzed the market. The price was like here. This is Monday up to Friday. So what did we do? We had a point of interest right there as a fair value gap. We wanted at least the market to take out that before going up. But I also emphasized that the market will come to this fair value gap right here, and then this will be a draw on liquidity. This low right there. And there's an excuse. Then the market, my mistake, it was that I analyzed this on wanting it to play on one day, but it took its time. This was the weekly trade. That was only the bet side that I did on my annotations, but it did exactly what I said it will do before it did this. The video is there, guys, and the timestamp also is there. This is when I come to the entries. Let's go to the entries. Maybe you look at the 1 hourly time frame as your higher time frame. You are a scalper, intraday trader, like that. So this is the point of interest that you have. The market came into this fair value gap right there, but you saw this. You couldn't take this high. What did we utilize? That right there, but it's not the part of your model. So you would have not taking a trade right there. You wait. It came here. At least it gave you fair value gap. It didn't take the low. Maybe when it came to this, you would have utilized it to go down and lost. It's still fine. But there's something. Is the timing correct here now? Are you asking yourself whether am I correct? Am I at the right time or not? Because this, if it's not at the right time, you expect this to be violated. So no trading opportunities. As you can see, the market, what is presented here, No trading opportunities right here. The price is choppy, but it's going down. No inefficiency right here. You took the highs, you have nothing. You have a fair value gap right here. This was Thursday or Wednesday's trade. Thursday's trade, I guess. And then you had that fair value gap that played, but this was before 9:30. Then you have your 9:30 right here. Look at what, before it took the high, it dealt with the stop losses. So you didn't have a good trading, I guess, week. So, but the market did exactly what we expected it to do. Went to your TP. Only and only on Friday. Okay. Let's leave the morning session. Go into the afternoon. You could have utilized this, but this was low probability trade, even though it was a continuation, because you had nothing to reference when it comes to higher time frame. I know from the low, when you go to the lower time frame, you'll see your entries. You will see that, okay, here the liquidity buy side was taken. After the buy side, then you went down, but it will be a low probability trade. So during afternoon session, what happened? The market came into this fair value gap after the displacement, after the liquidity has been taken. Right there, you have your model. What is your target? The low, or you further go down. So you could have caught your trade right there. Only on Friday, it was a good day for me to take a trade. Then we did that. Guys, without wasting any time, now we'll revisit. You know what we bring? We bring 1 day of annotations. I wouldn't spend time doing this because it's not going to develop you at this point, at this moment. So let's focus right on the simple trades that we're going to focus on. Now we'll go to the charts and annotate and see what happened on Friday. So we could have utilized that. How could have utilized that? Without wasting any time, let me see you on the charts. Welcome to the chat video, guys. On Friday, let's see what the market gave us on Friday. Let's look at the time. There you have your 9:30. Utilize this consequent encouragement to go down, but we're not going to focus on that. Let's focus on the clean, guys. I want your eyes to get used to this type of patterns, these types of structures, these types of whatever is it that you see here. I want your eyes to get used to that before you want to come into this, because you need to be a little bit advanced now to realize this, because you are utilizing the consequent encouragement as well. It's one of our model part, 50%, then it went down. But I want your eyes to memorize this kind of a patterns, because this is the start of it. So look at the time there. It's 1 p.m. Then you have 2 p.m. Then market ran to that low right there. So let's go and focus on that. Let's go to 15 minutes. Guys, pardon me, I left my PC running for the whole night, so plus the application I opened, I didn't take note of them before I started recording this video, so it's kind of a little slower than that. So we have our hourly time frame right here. Then our 1 hour fair value gap. Then let's look at this. Take this high to that low right there. Then what do you have right there? There's your OTE. What time is it? 1:15. They say the retest. What time is it? 1:30. And you know that's when the run is taking place. 62%. It couldn't reach for this fair value gap that you might have right here, thinking that it would come for that, but we still have another fair value gap here plus an OTE. So you take your trade from this point. Your stop loss, you would want to accommodate that fair value gap as well. Then you go for that. That would be a good trade. And I want you to, let's look at this now. Let's look at the consequent encouragement of this. Okay, this one right there, 130, because there is something that will make this market to run during that time. What do you have right here? Look at that. Can we do this? Okay, we have a little bit of miss right there. Let's fix this. So you could have utilized the 50% if you were looking at that. Then the 75% was missed a little bit right there. That happens, guys, but the higher time frame goal, you enter based off this, you go down. That's it. So from here, let's go to 5 minutes. We are interested on this sell, hence we went into this. Going to 5 minutes, guys. I'm trying to keep this as short as possible, under 20 minutes. Then what did you have right there? We have this fair value gap right there. The market coming, taking out the highs. It's fine. We expect this to be violated, and the price played, and it violates it here, right there. Then my focus is on this trade right here. How do I know that we are down? Market structure shift. I want to see just the perfect entry right here. So we'll go to 1 minute. If it doesn't give, you just utilize the hourly if you are comfortable doing that. But if you're not, guys, you'll just have to go to see these fractals, guys, this, and get your entries utilizing them. Then there was a 145 too. I wouldn't get into 130 right there, since the market, the liquidity right there. Then we took out that liquidity. This is an afternoon. Of course, I would take this model. This is what I've been backtesting. Or this is an afternoon trade. We create a consolidation, then we go out. We take that one out. Then market structure shift up to this point right here. The only inefficiency that you have is this one right there. Your stop loss could be right above this. From this, your stop loss be accommodate this fair value gap right about this. Then you enter here. Then we take this. It came back again. Did it take you out? No. Your stop loss, you accommodated this fair value gap right there. Then it came back and then it went down. It was not that nice picture perfect entry, but this is what you could have dealt with. You would be scared when it came here. So it is still best to come into this and then accommodate whatever is it that you have, or put it above this right there. But it has no reason to go above this, because this is this on its own. This high, this consolidation, this high, it's my model. So this on its own, it's my model. I would know that it shouldn't go above this. So I would accommodate it at least this or that. Then I would go for this 1:3, 1:4. Then you bank your profits. That was it. So guys, sorry for that. Going forward with this, guys, obviously we talked about the lows. I will see how we are going to attack, how we are taking the lows right there. There's a little bit of a fair value gap right there. I'll be watching, and then we have a buy side right here. So we took the sell side. We have this fair value gap. For this fair value gap to materialize, so we might push high to this, revisit that fair value gap, or do whatever is it. But wait for the right time to come. So I'll be looking at whether how we'll be dealing with. This will be the time that I'll be on the market. This time right here. So if we push higher, we create a consolidation and we push higher during that time, definitely, most definitely, this low will be the draw on liquidity, the one to go for. But if we take that one before, I will check and see if we have a continuation, or we just want to come back here as a draw on liquidity. But this will be more favored to go down right there, to take out this low plus that low that we have right there plus that low that we have right there. So my target will be somewhere around here for the long term. If we get it here, then that will be a nice run, guys. Without wasting any time, guys, I like to thank you to come into this session. Please, guys, like, subscribe, and share, and so that we can bring more community here. I can be held more responsible for doing what I'm doing, guys. Without wasting any time, let me see you on the next video.